And look who's here. Man of the moment, Eddie Ghabour graces our screens this Wednesday morning. I read your stuff, you see a major downside coming for the markets, and you say, and I'm quoting now, it gets worse from here and there's nothing anyone can do to stop it. All right, spell it out. What's the big problem?
So look, 3 weeks ago, I shared with you that we told our clients the reason why we have so much cash is we were worried about a liquidity event. And now we've had it. So the Fed raised until they broke something, and now they have. So even if they pause next week, you can't stop this cycle. Unfortunately, this bond market collapsing on the long end the way that it has and across the board is signaling a hard landing and a recession. That means more businesses are going to go out of business, unfortunately. We're still not done with the banking issue. And look, we still have commercial real estate that has a major problem on the debt side. Think about all these companies that have a tremendous amount of debt, that their businesses are tied to the consumer. When you raise the cost of capital the way that we have, you run into what we have here. And this is a result of living in a world of free money, zero interest rates. And now we have to normalize the system, and it's going to be extremely painful getting there. And so this cycle has started, and this is why I don't think anything we can do to stop it, even a Fed pause next week.
Okay, let me try to put this into a nutshell. The cost of capital goes up. Okay, cost of borrowing money, that's gone straight up to almost record proportions of going up. At the same time, you've got a lot of financial institutions sitting on long-term bonds which have lost their value. So if people want to redeem and get their money out, the bank or institution, whatever it is, they've got to sell those assets at a loss, and that's the problem. Is that where this is all about?
Yeah, that's part of the problem. I mean, look, if you think about it, all these banks have invested, a lot of these banks invested in long-term treasuries, and we know that they lost a third of their value, many of them last year. So they're all in the same predicament from a balance sheet perspective. And again, when you look at small businesses and the consumer, you raise cost of business while demand is going down. That is a recipe for disaster, unfortunately.
Real fast, we saw the producer price index actually falling in the month of February. The pace of inflation is clearly slowing. You don't see any upside in that?
So look, the inflation, I expect inflation to actually continue to go down because that's what happens in a recession. Demand destruction is what the Fed tried to do to get this to go down. Now, I think it's going to stay stickier because core, I believe, increased on the number last week, yesterday. So the Fed's in a tough spot. I think they're going to raise a quarter point next week to save face because they still aren't anywhere near their mandate where they're saying. I mean, last week, Powell just said in front of the world that they were going to increase rates faster than anticipated. And now they're going to come a week or 2 weeks later and cut rates or pause. It's going to be a big credibility issue for them.
Okay. Eddie Ghabour, thank you very much for joining us on this Wednesday morning. Thanks, Eddie.
Thank you.